You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, September 24th show. I am committed to providing you knowledge needed to be successful in every area of your finances. Knowledge is power, and that's what you'll receive from listening to the show today. If you heard my show at a different time or day, you are listening to a rebroadcast. You can call the show at 1-855-400-1150 or go online at themoneyhour.com to discuss anything regarding money, any potential guests you would like to see in studio, or best to connect with the guests that I have in studio. Right now, Seth Gililland with MassMutual Seattle, protecting your home with disability insurance. And I'm really excited, Seth, first of all, to have you in studio for the first time. Thank you so much.
Oh, thank you for inviting me, Tina.
And I'm excited for the first time in my 6 years of having the show to actually talk on this topic. So very excited to have a conversation with you today. And a little bit about Seth. Seth is a financial professional working with MassMutual Seattle. He helps individuals and families protect themselves from unnecessary risk with personal strategies designed to support their long-term financial plans. His main job is to help his clients make informed decisions in a way that feels right to them. Seth also helps business owners with proper planning to protect, grow, and transfer their business in a manner that they choose. In the Money Hour segment today, again, Seth talked about protecting your income with disability insurance. So, Seth, why do you need to protect your income?
Well, you don't hesitate to protect your valuable assets like your home, your car, and your life. So why not protect your income? Your ability to earn a living, more than your car, more than your home or any other big ticket item, is going to be by far your most valuable asset. That's what pays for your essential expenses like housing, food, utilities, transportation, and it also is what's going to help support members of your family. So tuition, childcare, medical bills. Without your income, all that other stuff is going to go away.
Yes.
So when you add your income up throughout your career, it's going to be your single biggest asset. And even if you don't think your annual salary is that big, that large, over the course of your career, of your lifetime, it's going to add up. So if you've got, for example, a 35-year-old who is making $50,000 a year, until retirement, he's going to be making $1.5 million. Now, that's not even accounting for raises and bonuses.
Sure. Okay.
So compare that to the 2016 median single-family price of a home in Seattle,
Yes.
$560,000. So what's greater, $560,000 or $1.5 million?
Sure.
Okay. And then which one of those are people most likely to protect?
Makes total sense. So, Seth, let's talk about the risk that we're protecting our income from.
Yeah, well, imagine this. What would happen to your standard of living if, due to an illness or an injury, you were unable to go to work tomorrow? So if you had to stop working due to a disability, the income you're earning now is simply not going to be there anymore. If you become seriously ill or injured and couldn't work for a long period, it'd have a major impact on your financial well-being and your family's well-being. Sure. So you'd have to find another way to cover your living expenses and support the people who are depending on you. And that's where disability insurance, or DI, comes in.
So let's talk about disability insurance. What is it?
Yeah, disability insurance is protection for a portion of your income. So if you do become too sick or hurt to go to work, your DI benefit will provide you with access to that portion of your income. It can also protect your retirement goals by helping you meet your current financial obligations so that you don't have to tap into what you have saved for retirement. And with any luck, you'll never have to deal with a disability that keeps you from being able to go to work. But it is a good idea to have a plan in place so that if you ever did become disabled, you could still cover your expenses and provide for the people that are counting on you.
So, Seth, what are the chances that one of my listeners is going to need disability income?
Well, when you think about the kind of disability that would prevent you from going to work, most people think of a car accident or a catastrophic injury. So it's something that could happen, but probably won't happen to me. It'll happen to somebody else.
Sure.
And the reality is that 90% of disabilities are due to an illness and not an injury.
Yeah.
So you're looking at arthritis, back pain, neurological problems, cardiovascular illness. Those are all more common than injuries when it comes to disability claims. And as far as, what are the odds of this occurring? Well, people think, oh, maybe it's 1 in 50, it'll happen to me. When in fact, 1 in 4 20-year-olds will become disabled before they reach retirement age.
That is crazy. One in 4
that's right.
Under 20?
20-year-olds, yes.
20-year-olds,
20,
wow.
Yes. So your listeners probably know someone who's had to take some time off work for medical reasons, even if it's not permanent.
Yeah. So what about other options, Seth, besides disability insurance?
Well, yeah, in the event that you would experience a disability due to illness or injury, there are several sources of benefits that you may be able to access. For example, assistance from the government or assistance from your employer. However, there are limitations on those benefits, and they may not be sufficient to meet your income replacement needs. So, for example, one of those is workers' comp. So that's provided where if you become disabled, if something happens to you on the job site, then workers' comp from the state is going to kick in.
Yep.
But that only if you are injured on the site, on the work site. And according to the National Safety Council, 73% of disabilities are not work-related.
Okay.
Okay. The other one is Social Security. So SSDI. That program is hard. It's hard to qualify for, and the average monthly benefit is $1,130. So that's not even going to cover my rent.
Exactly.
Right.
So let's say your employer does have disability insurance benefits. Are you going to have something in addition to that? Can it cover what's not getting covered by the employer's benefits?
Yeah, absolutely. That's exactly it. So if you have benefits from your employer, that's group long-term disability insurance. So that's a helpful benefit. It provides a very essential layer, but there are some things to keep in mind. First, if you leave for another job, you may not be able to take that coverage with you. Your new employer may not provide the same benefit.
Sure.
And also, if your employer is paying for that policy, the benefits you receive once you become disabled, those are taxable.
Okay.
So, you mentioned there a gap between what your income is pre-disability and what your employer benefits would be. So that's if people are looking at their plans, they're going to see it typically is going to cover around 60% of their salary. So that is their salary. Does not include bonuses or commissions.
Just the base salary.
Just the base
For
salary.
me, I would be in a little bit of trouble if it doesn't count.
That's right. That's right. If you have a position where, like a realtor, you have a lot of
or a mortgage
commissions,
professional.
it's not going to include your gross income. It's only that base salary. So when 60% could really be 30%. So whatever the number is.
Yeah.
So what that is there's a gap. Whatever is less than 100%, that's going to be the gap that's going to be what you're looking to get covered. That's where an individual policy could come in and fill that gap.
Got it. So additional benefits of having an individual disability insurance policy compared to using the other options.
Well, the first value is that it's yours. It's yours to own.
Yep.
It's portable, so it doesn't matter if you leave your job, go somewhere else. That's
Moves
following
with ya.
you. Yes. It as we mentioned, it can supplement the coverage, any group coverage that you already have. It doesn't have to be one or the other. The policy can be custom tailored to your specifications. So if you are making contributions to a 401k, those can also be included in your coverage.
Okay.
If accounting for growth in your salary over the course of your career, you can anticipate that and have your disability policy also include that growth, and provided that the premiums are paid, the policy is non-cancelable, so it goes on until age 65, and you don't have to worry about your coverage getting dropped or premiums getting hiked up.
Okay.
Yeah.
So we've already talked about, majority not really knowing the statistics, which is the case in many things. But, somebody might be saying, I'm just going to play the odds of not getting disabled. Why not just skip the disabled insurance? And if I do get disabled, I'll just go ahead and tap into my savings. So give advice to that person that might be listening to the show today.
Absolutely. Yeah, let's go on and play on the odds. All right, 3 and 4. That's not so bad. I'll take those. If I went down to Vegas, I'd take those odds. Yeah. But that still does leave you vulnerable. So that's assuming that you are going to have enough money set aside in your savings.
Yes.
And people are generally overestimating how much they have set aside. So think right now, if you have enough and you're saved in the bank to get by without going to work, without any income coming in for 1 to 2 months, you're already way better off than the average American. Even
though we all know you should have at least 6 months.
You should have. Yeah, that's absolutely true.
Yeah.
But most people do not.
Sure.
So if you don't have that cushion set in place, then you do need to look at some other options. So let's go down that path. Let's take a look at what does the reality of using personal savings look like to cover expenses during a disability. So say we've got a male, he's age 30, he's earning $75,000 a year. Of that, he's saving 5%, and he spends $4,000 a month on expenses. So if he becomes totally disabled, after 1 year of paying those expenses, he's wiped out 13 years of savings. Keeping in mind that the average disability is lasting a lot longer than 1 to 2 months or even a year.
Yeah.
So at MassMutual, we're seeing the average DI claim that we're paying is 4 years.
Okay.
So most people's savings are going to run out a long time before that. And as I mentioned, having to take extended time off from work due to an illness or injury is more common than people think. So if your benefits, your DI benefits, and your personal savings aren't enough to go the distance, you really do need to take a look at some other options.
Got it. So we've got a few minutes left here, and I want to ask that people may say that it sounds expensive. What does DI policy cost? Well,
when you're already paying for other kinds of insurance, for your home and your auto and life, it's hard to think about buying more. But a good way to frame it is to what DI costs versus what the benefit would be if you used it.
Okay.
So, really quickly, that 30-year-old man, now he's making $56,000 a year. He buys a DI policy. He's paying approximately $900 a year. Compare that to $750 for his coffee, his daily coffee.
Sure. Yep.
If he becomes totally disabled after a 90-day waiting period, he could receive $4,000 a month over 12 months. That's replacing 86% of his pre-disability after-tax income. And in that case, 1 year benefits will equal 52 years of premiums paid.
So it can sound like it could be a little complicated. So how do people find out what the right coverage amount would be for them?
Right. So consider a comprehensive assessment with a qualified financial professional.
Yep.
So you can call someone up. You can ask for a free policy review to see if in your plan there are any gaps in coverage. And you want to remember that which company you're choosing is going to make a difference, because this is something you want to have in place over many decades. So you want to make sure that if you do need it, the company is going to be around. So determine whether you can get coverage through your employer, whether you're looking at individual DI, whatever path you choose. You want to make sure that you have the appropriate amount of coverage, so that if you do become unable to go to work, you'll be able to get your expenses covered.
Wonderful. So all of you listening, if you don't have disability insurance, pick up the phone, give the show a call, go online and reach out. I'll get you connected with Seth. Seth, thank you so much for coming in and joining me in studio. I appreciate it.
Absolutely.
And this is your host and mortgage expert, Tina Mitchell. Got to say goodbye to you today, but I'll be here same place, same time next weekend right here at 1150 AM KKNW. Enjoy the rest of your weekend.